Success. First up on today's show, according to accounting and advisory firm William Buck, a lack of planning is costing small and medium-sized businesses millions of dollars. For more on how to combat the crunch, Greg Travers, tax director at William Buck, joins us now from our Sydney CBD studio. Greg, thanks for joining us. Now, you say many SMEs are failing to plan adequately before selling their businesses. What do you mean by this?
So what we mean by that is that when you're preparing to sell your business, a little bit of advanced planning makes a very significant difference to the outcomes that you can get from the sale. And that planning has really got two different aspects to it. There's part of it that relates commercially to the way that you run your business and making sure it's as valuable as it can be. And then there's another part which is a tax-driven part, and making sure that if you're going to sell, you're getting the best possible tax outcomes. So if I put some numbers to that, for a small business, if you sold your business for $4 million, which would be a great result for a lot of people, without planning, you might lose $2 million of that in tax. With the correct planning, that exact same business could be sold with no tax being payable. And it's not because you're doing anything, aggressive or untoward. It is just simply that you've taken the time to plan the way that you're going to do your transaction and taken advantage of the different concessions that are in the tax laws for small businesses.
Now, Greg, you're talking about SMEs in general, or are some types of small business falling into this trap more than others?
So we would say it would be small business generally. What we find with small businesses, the ownership and the management are usually pretty closely aligned. So in a lot of cases, the people that own the business are so busy running the business every day that taking a step back and saying, okay, well, in a few years' time, I'm probably going to be trying to sell this. What should I be doing now to prepare for that? It's just not something that comes up on their agenda every day, and as a consequence, they're missing out on opportunities or missing out on benefits that they should otherwise be taking advantage of.
So where in particular are these small businesses coming unstuck, and why do you think that is? Are they too busy focusing on other things, like you say?
Yeah, I think they're too busy running their businesses, which, at the end of the day is what they need to be doing. But this is also probably the most valuable asset that many business owners have. So being able to sell it in a way that maximises your after-tax money is pretty important for them and their families for their lives. So the main thing that we're seeing is around tax. Good tax planning is not crisis management, and so when people come to us for tax advice and they're already well into negotiating the sale of the business, quite often it's too late to do anything to improve their position. What they should be doing now is having a look at how the tax laws would interact in their business if they were going to sell, and give themselves some time to do the different things that they would need to do to improve their outcomes. And they can be very simple things, but usually they need a couple of years time to elapse between when you do the actions and when you eventually get to sell your business.
So where should small businesses be looking? Like you say, they should be looking at, the tax legislation and getting their head around that. Where can they seek that information?
Okay, so a good place is go and talk to your accountant, go and talk to your lawyer. So, they're usually the two that are going to have that information, and if they don't have it, they should be able to get you to somebody that has it. There is some information that's available on the ATO website. That's another good spot for it. But if you're a straightforward case, you know what, you're probably going to get what you need from those sources. If your case is a little bit more complicated because your business might be worth a little bit more, or the way it's owned is a little bit more complicated, more people involved, that type of thing, then you probably need to get some more specialist advice. Doing that now, I suppose that's the key thing for me, is do it now before you start committing to selling your business, so that you can do the things that are necessary to fit within these rules.
So how cost effective is this ultimately though? Do businesses need to go and see a lawyer or an accountant, or can they do it themselves, or would you recommend that they do seek that professional advice?
Yeah, look, I'm obviously going to say you should get professional advice, but I will say that for some people it is quite straightforward. So if you have particularly the micro and small end, you should be able to, with a little bit of time with your accountant or your lawyer, sort this out fairly quickly. For some, they're going to need a lot more specialist advice. But if I put it in context, 90% of small businesses are going to have a Without the advice, you might lose half the value of your business in tax. With the advice, it might only be a quarter or it might be zero. So, if you've got a business that's worth $1 million, spending a few $1,000s to get your tax position sorted out is probably a good investment for you to make. And that sort of large difference in what you're going to be able to realise when you sell your business, that can be hard to get that sort of increase in value in the business itself. So look at other things like getting a tax saving by accessing these concessions as a way that you can improve your position.
So Greg, as you say, businesses will save a lot of money in terms of tax if they do seek this advice.
Yep.
But in the long run, are there any other kinds of benefits?
So look, the long run for them on the tax side is very much about saving tax when you're going to eventually sell. There's obviously other planning that you can do, but that's not so much associated around the sale. The other aspect to the planning is really understanding what's driving the value in your business, because there's two sides to the equation. You obviously want to get your business worth the most amount of money that it can possibly be, and then you want to pay legitimately the least amount of tax when you sell it. So doing some thought now about what makes your business valuable, what's a buyer going to be interested in when they're looking at your business, and taking the actions to to focus in on those things. They'll help you increase the value of your business. And you know what? If it's important to someone who's a potential buyer, it's probably also really important to you. So taking that time to understand what those things are and focus in on it, even if you don't sell, it probably means you've got a better business just to keep working in.
Greg, we'll have to leave it there, but thank you very much for joining us.
No, it's a pleasure.